Canada's working population is retiring at a record rate, which could likely cause a spike in the need, perhaps, for reverse mortgages. Joining us to talk about it is Stephen Ranson, Chief Executive Officer of HomeEquity Bank. Stephen, thanks a great deal for joining us. You and we were prepared for the release this morning, just about 20 minutes ago or so, from Statistics Canada, of some fresh demographic data. That demographic data, again, released only 20 minutes ago, shows the number of seniors 65 and older growing 6 times faster than children 0 to 14. That's not a shock, certainly, but the confirmation of a long-standing trend here in Canada. The working age population between 15 and 64 has never been older, according to StatsCan. More than 1 in 5 persons, that's 21.8% in the population, is close to retirement. That is aged 55 to 64. The proportion represents an all-time high in the history of Canadian censuses. Now, before we get to the product that your bank markets, reverse mortgages, give us your thoughts broadly on this demographic trend and what it means broadly to Canada's housing market.
I mean, it's incredibly interesting, the data that's in the census. I was sort of scrambling through it for the last 15 minutes. As you mentioned, just a wealth of information in terms of, the demographic growth, as you talked about, but also the differences in population in different parts of the country. BC, for example, is finally kind of catching up to the rest of the country in terms of the age of its population. What does it mean for the housing market? Population growth is always good for the housing market. There were some stats in there about younger people want to be in downtown centers, the large parts of Toronto, Vancouver. That's a trend that we've seen for a while. But also that smaller urban centers are also growing, which I think is a bit of a pandemic impact. And again, we've seen that in house prices. Overall, as a population grows and you have more people, you're going to have strength in the housing market generally, and I would expect that's going to continue.
Well, we speak to realtors and real estate experts. They say that the so-called bank of mom and dad has been a very material force in real estate markets for many years now. And that, of course, is Canadians who likely have paid off their homes and have the financial resources to do so, helping their children, sometimes very significantly, with down payments or even ongoing mortgage payment support. Do you expect that trend to continue, and is that a function of the aging of the population?
Oh, for sure. I mean, housing markets are so strong. I think most people, our clients in particular, our average customer is 72 when they get a mortgage from us, but they can be as young as 55. They've made more money on their houses than they ever expected to make, 20% roughly in the last year alone. So they're sitting on, fairly big nest eggs and saying, well, my kids are having real trouble or my grandkids are having real trouble. How do I get them into the housing market? We've seen this in our business starting in Vancouver probably 5, 6, 7 years ago, and really continuing across the country as housing markets have strengthened, and there's been enough equity built up and enough total value built up that people can afford to do it.
Okay, reverse mortgages are a product that HomeEquity Bank markets to its clientele. You've told us that your average client is age 71. Briefly describe what a reverse mortgage is and to whom might it best serve.
So it's a relatively simple product. It's simply based on how old are you, where do you live, and what type of house do you have. And we qualify you based on those factors. We give you a lump sum of money. You take as much of the money you qualify for as you would like. You never make an interest payment, and you only pay the mortgage back when you decide to move or sell. So the benefits are you have no payments during the term, and you decide whether you want to be in the house 3 years, 5 years. We have some customers from the early 90s who still have the mortgage from us. It's really driven by the client and what they would like to do.
Very briefly, does it affect the bank of mom and dad calculation? Do people who take home mortgages have less to give to their children?
No, in fact, that's what they're doing, right? They're basically, in a lot of cases, giving their kids an early inheritance. As I said earlier, they make so much money on their houses, they don't need that money for themselves to manage their life in retirement. And it's effectively a way to give money to the kids now when they really need it, as opposed to waiting until they pass away or they sell their home and move into care.
Stephen Ranson, thank you a great deal for this conversation. Again, on some breaking census data released only 20 or 25 minutes ago, CEO of HomeEquity Bank.